Hey guys, Chegg back again with another portfolio update video. This week in the stock market was crazy. I have some good news to share with you all, some bad news, and some just plain weird news. So without further ado, let's get it. Alright, so here we are in my Robinhood portfolio. And as you can see, this past trading day was horrible. My portfolio is down 1.6%. It was just a bad day overall for the stock market. The Standard & Poor 500 ended up down 1.82%. So seeing that I was not quite down as far as the Standard & Poor 500 was is a plus for me. It makes me think that my portfolio is a little more on the defensive side, which is where I wanted it to be. Essentially, what I'm trying to do with this portfolio is for every 1% or so that the Standard & Poor 500 goes up or goes down, I want my portfolio to only go up or down 0.9%. So there's a term for that, and it's actually called beta. It's pretty interesting. If you get the chance, look it up, but essentially it is a measure of how an investment or a portfolio moves up and down in relation to the overall stock market. So like I said, didn't do too great this past trading day. Now over the past week, this is where we start getting into some pretty interesting things. So as you can see, I finished the week down about 0.1%, or a full percent, 1%. As you can see, at one point I was up 1.36%, and then almost immediately after that I went all the way down to 0.41%. At the end of the day I ended up about neutral, and I will get into why that happened here in a second. But overall, down 1% for the past week. I'm okay with it. Over the past month I'm still up 0.1%. Past 3 months I'm up 5.6%. Past year, I'm up 16.8%, and all time still doing pretty well, up almost 20%. We have had a little bit of a pullback lately, which is why I am down lately. So let's go back to this week chart. So like I said, very, very weird. I went down, almost like $170 in a span of less than a day. Why is that? Well, the short answer is I decided to purchase an options contract. I'm not going to talk too much about options on this channel, but essentially what it is it is a way to bet against the market moving one way or another. So what happened was I saw that Apple had their earnings call on Tuesday, I believe, and I thought that Apple they'd report decent earnings, but because I thought they weren't going to be fantastic earnings, I thought the stock would stay the same or go down. So what I decided to do is I bought a put contract on the Standard & Poor 500. I was essentially speculating that Apple would not have a great earnings report, and due to that, since Apple makes up, I believe it's like 5 or 6% of the entire stock market, the overall stock market would go down, and I would be able to hedge my portfolio using this method. Now, it didn't work out as I planned. Apple reported fantastic earnings, and the stock market actually went up right after this. But because there was a lot of volatility in the markets, a lot of people were afraid of the coronavirus, I believe. I ended up pretty much breaking even on this options contract. I was able to sell it back for about what I bought it for. Took a small loss, but it was a very interesting week. I will go ahead and say 99% of investors don't need to be dealing with options, especially if your portfolio is the size of mine or smaller. You really should not be dealing with options for the most part. I probably shouldn't have even done what I did. I had a strong belief that I thought the market was going to go down on Tuesday, which is why I did what I did. At best, options are a good tool for hedging your portfolio and modifying the amount of risk you want to take in your portfolio, but at worst, they can be just a trash can that you throw money into. So what I did this week is after I bought that options contract and then sold it, I picked up some more shares of the Standard & Poor's 500 high dividend, low volatility index. I picked up 5 shares, I believe, 6 shares, I believe. And I just really like this ETF because it'll be giving me monthly income. It's just nice to see that. The low volatility aspect of it means my shares in this ETF, their value should not fluctuate as much as the overall stock market will do, which I like. I like, having something that's a little more flat rather than up and down. So yeah, that was quite the experience this week with options contracts. I would say for the most part, stay away from them unless you really know what you're doing and you really have a well thought out plan. I will say I think there is a lot of value in learning about them. In the future, it may be something you want to use, maybe to hedge your portfolio. Maybe if you're afraid that the market's going to crash, you could buy a what's known as a protective put, which will essentially mitigate the losses you have in your portfolio if the market was to go down. So with that, I think I'm going to go ahead and jump into my M1 Finance portfolio and show you all how that has been doing. All right, so here we are in my M1 Finance portfolio, and as I've talked about before, this portfolio is all about the dividends. I own 100 different stocks, fractional shares of 100 different stocks, and all of the stocks pay a dividend. My goal is to increase these dividend payments over time. So over this past trading day, I was down 1.7%. Over the past week, I was down 1.5%. Over the past month, I'm down 1.8%. For this past quarter, I'm up 1.85%. And all time, which is going to be the same as my return over this past year because I started this portfolio last July, I am up 6.5%. So I think at one point I was up 11 or 12%. This is now farther down. I'm not upset with this mainly because these stocks going down in value means I can buy them at a cheaper price since I'm continuing to invest money on a weekly basis. And me being able to purchase these stocks at lower prices means that I'm going to get a greater dividend yield from these shares that I do buy, which is going to help my portfolio grow over time. So what I kind of like about this portfolio is if the market goes up, well, it's great because now your portfolio is worth more money. But if it goes down, now you just have a great buying opportunity to pick up shares at a lower price where you can increase your dividend yield, which is going to help you a lot over the long term. Because now instead of buying shares that might yield, 3%, I can pick up shares that'll yield like 3.4, 3.5%. Essentially, I'll be buying the same stocks, the same assets, but just for a cheaper price. That's the way I see it. Now, the only exception to this is if there is a fundamental reason why these stocks go down in value. Like let's say a company is just doing really poorly, they're mismanaged. Then this is one of the cases where I would consider just selling, taking my losses and just switching out that stock with a different stock because my biggest thing for this portfolio is all the stocks that I own have to be profitable. They have to be able to sustain their dividend payments because how else am I going to grow my dividend payments over time if these companies can't even pay their own dividends? So over the past week, I received some pretty nice dividend payments. I got 2 cents from Roper Technologies, 6 cents from Cisco Corporation, 12 cents from Capitala Finance Corporation. I think why this dividend shows up in 2 separate payments is because I think this company paid a regular dividend as well as a special dividend. I'm not 100% sure on this, but that would make the most sense as to why this payment is showing up in 2 separate transactions. It doesn't seem like M1 Finance specifies if one of them was a special dividend or not, but kind of interesting. I'll have to do some more research on that. I got 7 cents from Chatham Lodging Trust, 6 cents from Gladstone Investment Corporation, 4 cents from Gladstone Land Corporation, and 5 cents from LTC Properties. So these dividends just keep rolling in regardless of what's going on in my life. It's just nice waking up and seeing these dividend payments pretty much on a daily basis. If not on a daily basis, then I certainly see some multiple times a week. So with that, I think I'm going to wrap up today's video. Thank you all for watching. If you enjoyed the video, please hit that like button down below. Please subscribe to my channel, and I will see you all in the next video. JGraph out.